Hello everybody and welcome back. This is the Realta Lesson 2 Homework. Yes, there is homework. We'll be looking at, in Lesson 2 Homework, the creation of a demo account at the broker of your choice. Perhaps more than one broker. Maybe it's MT4, maybe it's MT5, maybe it's ThinkTrader, wherever it is. Open a broker demo account and place trades on this one platform in your demo account using the strategy that you've decided will be the one you follow for your live trading journey. Manage the trades, place as few as 20, it's not really enough 20, as many as 50, ideally that should say 50 to 100 demo trades in order to establish a win-loss ratio and an average pip gain versus average pip loss. If you think that the gambling institutions of the world don't have a hold percentage, you'd be very wrong. I worked for Sun International many years ago as an accountant in the hotels and casinos, and there is a hold percentage per machine, per game, per table, per roulette or blackjack or poker, whatever you're playing, there's an anticipated hold percentage. If there is a big variance to what was the budget, there is a big investigation later as to why. That's why we keep a journal. If there's a big variance to what it was we budgeted, there should be a big investigation as to why. And how do we know that we varied? Well, we will have a plan. And the plan, the daily trading plan, should be used in conjunction with your journal. You record your trades. But in your plan, you should say by a given time on a given day or series of days, you're at the office and you've checked, or at your workstation, and you've checked the news. Do not move forward unless you've checked the news. Check for any major pivot levels and higher time frames. Use pivot levels like Camarilla, Fibonacci, Woody's. Use them on higher time frames or on intraday time frames to be sure where the support and resistance is. Know what that is. Learn it and know it for each day. And then select what markets you will look at. Maybe it's not the FTSE or the Dow. You want the NAS, the DAX, the Euro dollar, the GB dollar, whatever it is, but list it in your daily trading plan. Because later on when you review your journal and you realize you've got trades opened on something that wasn't in your plan, maybe they went well. That should have been a strike. Maybe they didn't go well. That is a reason you shouldn't have been trading them, because they weren't in your plan. You need to plan. Have a plan, trade the plan. And then you'll note here that this time, well, it's 30 minutes later than that time. It doesn't necessarily have to be a full 30 minutes, but it should be after you sit down. Make sure you've had time to check the charts and check the news. Give yourself a schedule from when to when, on which days am I allowed to be in the workstation placing trades. And what you're looking for, key entry signals in order to establish high probability, low risk entry opportunities. Have a budget or a target of pips that you seek for a day or for a week or for a session. Have that target in mind and know it, so that when you've hit your target, you know it's time to walk away and you will not be guilty then of over trading. Since you have a target for your profit, you should have a limit, as in, well, if I lose half of what I'm looking for as a profit, then I'm going to call it a day. I'm not going to trade again that day, because clearly I didn't check the news, I didn't check something, or my head isn't where it should be. I should not be trading right now because I've given away half of what my daily target is. Take the break. Above that line, all that's editable to suit yourself based on your availability for trading. Below this line, obey the rules. This is not editable. This is not negotiable. You must obey the rules. Once you know what they are, you can move through the gates in the appropriate direction. We'll talk about them in lesson 3. Follow the 3-strike rule. If you make a mistake, 3 mistakes, take a break. And I mean, like we just discussed, if you're meant to be trading Dow and you placed a NAS trade, maybe you made more pips that was in your target. I don't care. If it wasn't in your plan, it's a mistake and you should consider it a mistake, and that's strike one. Maybe you bought instead of sold. Maybe it's still one and you were wrong in the first place. Don't care. A mistake is a mistake. 3 mistakes, take a break. Avoid late entry. Ideally, you're forbidden to enter late, but you're a grown-up. I can't tell you not to. You shouldn't enter late. There's 2 ways to look at it. 1, your risk is bigger because the stop loss is still in the same place. And 2, you didn't believe it when it was a real signal. You don't deserve it now. Don't trade late. Don't enter late. Follow only valid and strong signals, ideally with the trend. Double cross, we talked about it some moments ago. 1 cross down here, 1 cross up there. Bollinger Bands, the oscillator of moving averages, the rules of your strategy denoted by your chosen indicators. Remember, the strongest moves are when multiple time frames are crossing together. That's when the strongest moves are. So if you're observing a 1 minute next to a 2 minute or next to a 3 minute, when they're both going together, those are usually the strongest moves. Keep an eye on your charts, not your balance. You don't care if you've made £200, £400, $1,000. You don't care. You obey the rules of the strategy first and foremost. So watch the price action, watch the indicators, watch for divergence, A, B, C. Always be checking. That's the deal there. No trades before 8, realistically. Just beware of the speed bump. There is a speed bump, and generally it can be at the open. Here is the US Open today, 2:30 p.m. You can see moving up, up, up. Boom! That's a speed bump and a half, isn't it? This 1 bar, 520 at the bottom, 640 at the top. You've got a 120 pip bar made in 1 minute at the US Open today. So beware that there is a speed bump around market open times. 8 a.m. London, 9 a.m. London banks, 14:30 hours the US cash market opens. 13:30 hours the US futures market opens. Just beware of those speed bumps. Don't trade against or outside Camarilla levels. Basically, you know, or you're going to know because you've checked pivot levels, you're going to know where the major support and resistance is. Be aware and factor those in. Don't ignore them. Don't ignore the higher value EMAs. They are right there telling you, don't ignore me. You see, price broke the big round number, but it couldn't quite break through our big purple line though, could it? Because that's a higher value, respected EMA level. Note, it's not just some random round number. It's a number in the Fibonacci sequence. And lastly, a little note there for your mindset. A consistent trader is able to fully immerse himself in the execution of each and every trade without attaching consequences to it. In other words, you need to be a little bit absent emotion for your trading. Focus on the process. Don't get caught up in the emotional side of it. Just focus on the process. Trade safe, everybody. Thank you for watching this. I'll see you in the next lesson. Bye-bye.